Welcome to Elementary. I hope you're having a fabulous Monday wherever you are. I am ecstatic because I got featured in the Globe and Mail. And while it was a story about downsizing and some regrets, this is where my signature process, my Chic Move signature process comes into play, because I do help people looking to downsize actually deal with the questions up front so they don't have to deal with regret at a later stage. So yeah, we do all the heavy lifting now so you don't have to do it later on. But today I want to talk about something far more sinister than the article that I got featured in. So today I want to talk about credit. And there's a reason why I want to talk about this. You know, I'm passionate about credit. I get so excited when I see young people with great credit scores and great credit history and taking pride in credit. And I want to educate, if you're new to Canada, if you're new, or even if you're not new and you just haven't paid attention, I want to tell you a little bit. I want to bring this, I want to highlight it. I want you to know how important truly credit is in everything you do. It's the new currency. Hence, credit, currency, it is the new currency. It is what people look for. You can have all the money in the bank, but if you don't have credit, no one's going to lend you a penny. But when does it become crucially important? I'm going to tell you a couple of stories before I get into my credit episode. I want to share with you a few stories on how I decided that this would be a good time to really talk about it, because right now, I'm finding personally that people are sitting on the fence with their home buying decisions. A lot of times, I am getting people saying, hey, 2025, is it a good time to buy? Should I wait till 2026? Quarter one, quarter two, quarter three. And the one thing I will say is that, look, in the 90s, when interest rates were crazy 20%, crazy. Now, I do understand that homes were not $1 million, but for a $250,000, home, you'd probably be paying quite a bit. You'd be paying quite a bit of mortgage. And I don't think people understand, because I have so many people that just call me and they're like, yeah, I'm looking for a small bungalow, under $1 million. And I have to break down that amount to show them what under $1 million means for mortgage. What does it mean for down payment, the whole 9 yards? But I'm not here to talk about to talk you out of buying a home. I'm here to just tell you, you need to be savvy, not just with how much you'd qualify for or what you can afford. There is something about buying a home. There is something about owning a property, and not just owning it, not being house poor and paying for it. That's kind of the key to it, right? So I'll give you a few stories that I've been dealing with, and it's pretty sad though. I had a couple of actually seniors reach out to me, and they have no place to live, and they have very limited income, and they're looking to rent a place for $800, some $1,200, some $1,500, some say, I can't go past $2,000. I only make so much. But the fact of the matter is, you might be someone who's paying a very low amount for rent. And that low amount for rent only becomes valuable if you're taking the difference and storing it away. So let's say you're a young professional and you're paying $1,000 for rent because you happen to get lucky and you got a place before all of these rent costs went soaring high. And great. You've got a place for $1,000. Well, rents for a one bedroom right now are about $2,200 to $2,400. Well, they were $2,400 earlier on last year. And then over time, the rent started dropping a little bit. It went down to about $2,200, $2,300 in some cases, depending. But that's because we have an influx of condos on the market for sale. And some of them are putting those brand new condos up for rent, hoping that people will just rent it for about a year or so. And then move out and they can go on and sell it when the market gets better. Anyhow, having said that, whether you're paying $2,000, $2,200, $2,400, $2,500, it's all in the double digits, those big double digit numbers. And so if you're paying $1,000 and you're not saving the remainder, and for some reason you have to get another place, you're going to be in trouble. You're not going to be able to afford it. because you've adjusted your budget to be for $1,000. So I would say is if you have great rent, great for you, good for you. And if you're paying someone else's mortgage, it is what it is. But if you got like cheap rent, that's good. Just make sure you're banking the rest so that you have money when time comes and you have to change your situation, right? So last week I had a few stories, and the ongoing segment was, we're looking for a place. I have to get a place for my wife, kids, da da da. And I understand being new to the country. And I will say the first thing is if you're new to Canada, get a driver's license. It's not a luxury. Get a driver's license. Even if you don't have a car, get a license, right? And the second thing is get a credit card. No credit is no credit card. No credit is zero credit. It's not good credit because you don't have any credit. It's zero credit. And credit is the way of the world. It's it's the currency of today. It's what's making us move forward. So this is what the ongoing situation was. Everyone I asked, not everyone, sorry, a couple of people came in. Yes, I can afford this much. I have a job. I have a whatever. And then the question came up where I said, how good is your credit? And they were like, well, yeah. Well is not good. Well is, you need to work on it. Well is not going to get you a place, not with a private landlord, right? So I will say, and then some of them were like, well, I get paid cash. And I go, okay, so how do you prove you have funds? No one's going to rent you a place if you're like, I get paid cash. They're like, good for you. So it's that. And, I'm saying it with a chuckle, but it was pretty sad because I had, the stories are out of this world. One girl got in touch with me saying, oh yeah, I lost everything, and then I had identity fraud, and then I had, my other place got on fire. But what's that got to do with your credit? Okay, yes, you had identity fraud, but I didn't really know I had identity fraud until, So credit is like the next best thing. If you have no money and you have some credit, you can go places with that. So that's why I wanted to talk about credit, because I was listening to all these stories. And like I mentioned when I started, when I see young people with great credit who are so proud of credit and taking good care of their credit, it makes me so happy because it makes me realize that someone is paying attention. Now, I do understand that sometimes you're not taught these things, but in the world that we live in today, everything is found online, right? You can literally look up what you need to do to fix your credit. But I think what happens is people use credit and abuse it. And then they don't know how to get out of the rut. So it becomes an issue, right? So this is where, we have to really be mindful about where we go with it, because credit today could be just for buying a car, buying something, getting a credit card. But really, your credit score is so important because it goes towards your rental. It goes towards purchasing if you're looking to purchase a home. All of these things are part and parcel of making credit work. So for some of you who don't know me, my name is Jacqueline Watson, and I'm a realtor with Sutton Group Tower in Toronto. And I want to say, I think the question, how do I improve my credit score, is maybe one of the most searched Google responses. It's by far some of the questions that I get asked. And if you have Googled that, then you're not alone, right? It is so important that don't be embarrassed if you're listening to this down the road and you have bad credit. No judgment whatsoever. But I want to say is that if you're listening to it today, don't just listen to it and waste 20 minutes of your time. Listen to it and do something about it. And that would mean much more than actually listening to this episode. So first things first, let's assume you know what a credit score is, right? A credit score is like your financial report card. It's like the status certificate for a condo, right? It tells lenders that you are able to pay your bills on time and that you are obviously, there are a few things that it tells lenders, but one of the things it tells them is that you're able to pay on time. Now, your score can range from 300 to 900. And here's what some of it goes to, right? Most of the biggest part, I would say about 35% is your payment history. If you're paying late, you're getting dinged, right? 30% or so, please don't quote me on these numbers, right? I'm just kind of using numbers, a high amount, 30% is on how much you owe. So I'm trying to calculate up to 100. So 30% is on how much you owe. So if you have a credit card that is $1,000, let's say, and you're constantly maxed out, you're at 700. Ding, ding, ding. It's a ding, okay? If you have a credit card that is $10,000, $1,000, you should be actually no more than 30% of that. The more you use, even if you pay it off at the end of the month, which is even worse, right? Like if you're paying off, like first of all, you should be paying off. You shouldn't buy on a credit card if you can't afford to pay. I understand emergencies happen. And for that emergency, fine. But if you don't have an emergency and you're just at the mall and you're just shopping and you think, hey, I'm just going to buy, that's okay. Buy whatever you want. You're there at the mall. Life is good. No one's telling you not to live your life. Just make sure you have the money in your bank. Now, I personally want to say that I actually encourage you to use your credit and pay it off every month. Use your credit, pay it off every month. But if your credit card is $1,000, don't use all 1,000. Get a bigger credit. It's really trying to use maybe 30% of it. So if you have $10,000, you use $3,000. If you can afford to pay it off, you should be paying it off at the end of each month. The other part too is that it builds your credit history. By paying on time, paying it off each month, it helps you build your credit history. 15% or so goes for how long you've had your credit card. And it makes a big difference. If you've had that credit card for a long time, it really gives people like a bigger picture to look at. 10% is the type of car, like the type of credit, like car, credit cards, loans, car leases, so on and so forth. And 10% is new activities. So too many hits. Okay. But I want to say, if you're looking for a mortgage in the month, if you're looking for a mortgage, and if you go and get a number of checks, it all counts as one for that month. But if you go to a mortgage broker, they can help you source different products. And therefore, you don't have to go to 10 different places. You can still go to a couple of people. But all I'm saying is that it counts as one hit. But really, if you're constantly asking for credit, this credit card, that credit card, it does kind of deplete. It takes away from your credit, whatever it's called, your total number. And it makes a big difference. So I know a lot of us get like jazzed. Hey, this credit card is offering, to sign up, you get this and you get this for free. It's not free. Nothing's for free. But some of us sometimes get like all jazzed. Oh, I should just, sign up for this credit card because I'll get like $200. All I have to do is spend X amount of dollars in the first 2 months. So think about it. Part of that goes towards your dings, okay? So let's be honest, life happens and sometimes you miss payments and sometimes you are a bit late. That doesn't mean you're irresponsible. It just means that you should find a way to rebuild and you should find a way to be on time and you should find a way to maybe open your credit card. You see what day you're due. You put maybe a reminder in your phone. If you use an Apple product, ask your friend there, who, because if I say it, she'll ask me what I'm talking about. But ask her to set a reminder and do it that way and try and keep on time. We all forget sometimes, but it doesn't help. So talking about credit, this is so important. I know people sometimes think, I'll just bury my head in the sand, and no, it won't go away. Unfortunately, it won't go away. You just have to dig in and repair it. And once you repair it, you just make that promise to yourself that you'll never go back and go down that path again. And if you only know how much interest you're paying, if you take a look at the interest and how much interest you're paying, and it'll tell you this amount of money, it's going to take you X amount of years to pay. And if you see how much interest you pay on the total that you spend, you will be sick to your stomach because you will be realizing, oh my goodness, I could have bought 2 of whatever I bought or 5. So number 1 is paying on time. That is something that you can, set up. Even if you do an auto pay, right? Your score will grow if you keep doing it for months on end. Keep your balances low. 30% credit limit, 30%. Your card maxes out at $5,000, keep it under $1,500. If your card maxes out at $10,000, keep it under $3,000. It's 30% of your credit limit, okay? Now, they say don't cancel old accounts, and this is part of it. Like, yes, I know a lot of times you want to get rid of the credit cards if you're not using them, because we all know, like, nobody likes to have these cards hanging around, because sometimes when your wallet gets stolen, you don't even know what cards you have in it. Avoid new credit hits. Like I mentioned earlier, if you're new to Canada, listen, you need a credit card to get started. And a lot of times the store credit cards are a great place to start, like Canadian Tire or something like that. They give you small amounts, they give you small limits, and it helps when you're new to the country. But just remember that once you've got secured and you have credit, those rates are pretty high. Those rates are higher than even some of the other credit cards. So you may want to rethink those credit cards or store credit cards, right? And each time there's a credit check, you get a hit on your credit, right? So you may want to think twice. Like, your credit is really, really treat it like cash, right? It's like giving away cash for nothing. Like, just treat it with a lot of respect, because it does make or break you. And if you have something that you see something that is not correct, make sure you dispute it, you write into it, and you look at your credit every month. Now, you can get a free credit report every month. You can get the free version. So when you sign up, they'll say sign up and there's a paid version. Don't get the paid version, get the free version directly with the Equifax or TransCanada, TransUnion, whatever they're called. And just understand that those ones are directly with them. So get it from them directly. You do not need to go through any other third party to get a credit report. It's not necessary, because they have to give you a monthly one. So you can just get it and check it monthly. And that way you'll be on top of it, and you'll have no questions around what your credit score is, or how good you are, or how bad you are. And so why I'm talking about credit as a realtor, because nothing hurts more than finding that perfect home or condo and being told by a lender, sorry, you don't qualify. Nothing hurts more. It breaks my heart to see sometimes people get into these little situations, but it also fires me up to make you understand, to fix it before you fall into this crisis. Okay, in 2025, everyone is picky. While you're picky about the property you want to buy and where you want to live, lenders are picky about who they lend money to. They want to make sure that you're not going to stiff them and take off with this big loan, right? That you're going to pay on time, that they don't have to chase you down. Trust me, the bank doesn't want your property. They just want their money with their interest. They do not want your property. They do not want to sell your property. They're not in the real estate game, okay? They want you to pay. They want to make sure you have, strong income, a clean file, good credit. And honestly, it's never too late to get started. Even if you're not planning to buy a home for the next 5 years or move for the next 5 years, it doesn't matter. It helps. And trust me, I don't know, but I do think that if you have good credit, you get prime lending rates. I'm sure of it. I don't know. Kim, what do you think? Anyhow, so what are some myths that I think people have around credit? And I really need to kind of say, it's not true. So I have no debt, so my score must be good. No credit history equals no score. I want to tell you that. If you're new in the country and you just got off the flight, get a driver's license, get a credit card, along with your SIN number, by the way, but do that. And you do not need to give your SIN to get a credit card. If I pay off credit cards, I should close it. And that's also another no, because it does keep the history. And what I say to people is buy little items. I actually encourage people to use their credit card. The reason why I encourage people to use their credit card and not their bank cards, but you have to be really good and you have to be on top of it, right? Because when you use your credit card, I know a lot of people, they get so happy tapping, they forget, $1,000 later what they spent the money on. Of course, when you're using your bank cards, when it doesn't tap anymore, it means you'll run out of funds. But the reason why I say use your credit card is because if you go to a place and there's some fraud or something happen, or this money that you've used on a credit card is now not your money, it's the lender's money. So they are a lot quicker to work on that money than when they have to reverse and give you your money. So that's what I would tell you. check your credit scores. And I think what it says is checking my credit score will hurt my score. It doesn't. It's not true. If you check, it's not a hard hit, right? It's you're checking your own score, and you're allowed to really get that free report I talked about. So check it every month. But all I'm telling you is that credit is absolutely important, whether you're renting or you're looking to buy. People want to see that that it's a clean file, that you have a job, that you have good credit, and that you're going to pay them back. And and just having a job and credit doesn't mean you're going to get the amount that you are asking for, because this is another myth that I think people face. I think some people who have just come to Canada, they don't realize how the system works, because I think in different countries it works differently. Like you can just ask for money and you can you borrow at whatever. But out here, there's like a whole calculation on how much you would qualify for. So Kimberly is saying apps like Borrowell are great tools to use, as it doesn't impact your score. Yeah, and that's right. Apps like Borrowell. And honestly, I used to use Borrowell when the credit reports from were not free. But honestly, after you can get free credit reports, I haven't used Borrowell at all, because I feel like you can just get your report directly sent to you directly from those groups and catch any anomalies that you see. Anyhow, so that's what I wanted to talk about today. I think credit is such an important topic, and I don't think we talk about it enough. I think it's like one of those things that for some reason people don't like talking about these. They're like taboo topics. But it's really important to know. It's no different than budgeting. It's no different than how you spend your money. It's no different than, sharing your financials. I'm not saying sharing your financials so all your kids know everything, but really kind of making your kids learn at an early age how important it is to watch for money. I have this funny story to tell you. When my daughter was really little, my husband would always say to her, like, okay, I have a job for you. Do you want to bid on a job? And you want to wash the cars for X amount of dollars. And one day she washed the car, and there was this whole shadow down the side, like dirt shadow. And the car was really dirty. And so she's like, she missed a spot. So my husband said, hey, you missed a spot. And she's like, oh my God, the car was really dirty. And so my husband said, well, the next time, you should really kind of take a look at the job, take a look at what's involved before you agree to a price. It's kind of funny because as much as our hearts were breaking, we just wanted to give her the money, give her a little extra. It was not really a good way to teach her, right? It was going to be like, I think kids have to learn, and I think it makes it exciting, and it makes them curious about money. But it also makes them understand how hard it is to work and earn money. And I think that at the end of the day is the most important lessons you can teach your kids. So seeing that there are no questions, until next time, we'll see you then. Once again, my name is Jacqueline Watson. I'm a realtor with Sutton Group Tower in Toronto, and I want to thank you for spending your dinner hour with me. And until next time, we'll see you then. Take care. Bye.